Good morning and welcome to the Pimento Business Development Club. The aim of these clubs are really to help independent agencies with all aspects of new business, marketing, and growth, and to provide new ideas and new thinking that's going to support their future growth and their future sort of thinking about how they move their business forward. If you don't know me, I'm Paddy Woods. I'm the founder of Pimento Fuse, which is a new business consultancy built to support independent agencies' growth. If you haven't been on these calls before, please do just ask questions in the chat box as we go, and I'll look to bring you in after we've had the sort of presentations from Tom and Mike. So today's session, I think, is a really important one. The agency industry is currently in a state of transition. Our industry has to adapt and move forward with the changing times, but it seems many agencies are actually failing to start this process and not sure how to do that. So today I've asked Tom Salmon from Agency by Agency and Mike Lander from Piscari to share their latest research. Tom is going to be opening up with the latest agency by agency research, which explores the total agency marketplace. And then Mike's going to be following up with the agency reset paper, and which talks about how they need to transition to survive. We will then open up to have a panel discussion and look to bring you into the conversation after that. So Tom and Mike, if you want to do quick introductions to yourselves first, and then we'll share the screen and go through the presentations.
Perfect, brilliant. Thank you, Paddy. So yeah, my name's Tom Salmon. I'm one of the co-founders of Agency by Agency. I'll tell you a little bit more about what Agency by Agency does, but my background is a former MD of an agency called Epiphany. We were a digital and search specialist of about 200 people, and my journey through there was as marketing director. So I was responsible for propositional development and positioning of the agency, and then became managing director as we transitioned into new ownership under a PLC. So yeah, that's my experience in the sector.
Hi, I'm
Brilliant,
Mike
thank
Lander.
you.
So probably most relevant for this conversation, I'm an ex-procurement director. So I'm the kind of, if you worked with larger brands, I'm the kind of person you'd meet when you're selling your services into bigger companies. I now work with agencies. So predominantly most of my work is working with agencies, helping them think about what AI means for their future commercial models, and how you basically win more RFP type driven opportunities.
Brilliant. Thank you, Mike. So I'm going to pass over to Tom, who's going to lead, and then I'll bring in Mike afterwards. Thank you.
Brilliant, thank you. So this is the first hurdle we've got to cross, which is
Technology.
does the
Yeah,
screen share work? Hopefully
that
that's
does.
working for everyone. And you've got full slides, not my notes.
Yeah,
Excellent. Because the one reveal that would be that there are very, very few notes. So you can see that I'm actually having to rely on memory for some of this. So yeah, good morning, everybody. So first of all, to start with, what is agency by agency? So we were set up in March last year. And really what we're trying to do is to help people understand the sector, to help people find agencies and to help agencies to be found, to help make decisions that are actually rooted in data. When I was an MD of an agency, I often found it frustrating that you were making quite big decisions that affected people's lives, that affected obviously your own business, with very kind of scant information about what was going on in the sector, what was growing, where the kind of movements were, who was doing what, and all these kind of things. So we help people think about their business, but through a very, very sort of data-centric lens. So launched last year, and actually when we launched, it was the first time that anybody had actually tried to actually map the sector in its entirety. So what we do, we look at all sorts of agencies. We've got 29 different types that you'll see as we go through this presentation. We help understand the sector in its totality, but we also help to kind of track individual kind of agencies on an agency by agency level, which is where the name comes from. So when we mapped the sector last year, it was the first time that anybody had actually seen the agency sector in all of its glory. We don't have a trade industry. We don't have an incorporated body that looks after us as a sector. Agency by agency isn't that, but in the absence of that body, that's, I guess, some of the gap that we're actually filling. So we do a big piece of annual research every year, and our data updates every month. It's just that if we did a big piece of research every month, we wouldn't have time to do anything else. So we do a big piece of work every year. That's all available for free if you go to agencybyagency.com/atlas. And what that reveals is some really intriguing kind of stats about what's going on in the agency sector at the moment, some of which are on screen now. So the UK is genuinely world-class agencies. We're brilliant at creative thinking, in strategic counsel, building brands, the science of reaching audiences. UK agencies punch well above their weight on the global stage, and that's always been true. But until last year, and when we updated the data and the research this year, we couldn't really prove that with data, and that's really why we exist. And we think that an agency sector of this size deserves better, I suppose, in terms of representation and support, and certainly a link into policy and support at a government level. So there are nearly 25,000 active agencies in the UK. Offering a whole series of different services. Like people on this call, some agencies are micro agencies, nano agencies, sort of 1, 2, 3 people. Some of them are far bigger, into the hundreds of people, and we map the lot. So as a sector, we employ the best part of 200,000 people. We contribute nearly 18 billion in gross value added to the UK economy. And on an average, and we'll go into the dangers of averages in a second, the sector is growing at around about 3.5% per year when you look at turnover and you look at employment in the sector. So it's a really big sector. The UK is really good at agencies. There's some fabulous work going on. We think that there could be a better job done if the sector actually kind of understands itself in a bit more of a robust way. So today we're going to present some of the exec findings, I suppose, of the research. As I said, there's a ton of other detail that sits behind this, which you can get on the website /Atlas. So 7 in 10 agencies in the UK sit in a stable band. So what do we mean by that? Well, we measure growth rates, and we look at growth rates according to how quickly an agency is employing people and how quickly an agency is growing its turnover. And we bucket those into different categories. So fast growth for an agency is 20% or more per year. Growth is 10 to 20%. Stable is basically growth of either minus 10%, if that makes sense, or 10%. And then from then on in, you've got agencies that are shrinking. Shrinking is minus 10% to 20% shrinkage per year, and shrinking fast is more than 20% shrinkage within a year. So the lion's share of agencies in the UK are actually in this kind of stable band, something that we'll probably come back to later on. So if your agency, if you're on the call today from an agency and you're in that stable band, you're kind of normal, for want of a better expression. If you're in the green bands, then congratulations, you're doing a very, very good job. When we look at the data, we can see a sustained drop-off in the number of new agencies being founded every year. As you can see from the chart on the screen, the number of agencies in the UK was growing steadily through the 2010s, even after sort of 2016 and Brexit. And it was really the pandemic that interrupted the kind of continued growth of new agencies being launched in the UK. So what that means is that now more than half of all agencies in the UK are over 10 years old. The sector is increasingly mature. There are far fewer new entrants to renew it. Now, in the data that you'll see on the website, you can actually start to see new agency formation by different types of agencies as well. So the agencies that are being born this year, last year, the year before are very, very different in terms of what they do than agencies that were born maybe sort of 5, 10, 15 years ago in terms of their approach to business, in terms of the kind of specialisms that they're offering, and in terms of the growth rates that you see amongst those agencies. So there's some really interesting stuff in here, we think. I mean, what does this mean for the future of the sector in terms of new agencies being born? Are we seeing more consolidation than we are seeing renewal? For example, what does that mean about the shape of the sector in years to come, and what kind of environment will we all be competing in as agency owners? So as I said, older agencies actually account for over 60% of the whole sector. It's increasingly mature. So the older agencies, actually agencies that have been around for over 16 years, are really, really important to the sectors. They might be a little bit older, but they're really important. So they actually represent those agencies that have been around for over 16 years, 30% of active agencies, but 61% of the turnover in the sector. They employ over half the workforce in the sector, and actually they actually raise nearly 80% of all the investment funding being received into the sector. So on one hand, you've got this kind of high growth, high specialism kind of new cohort of agencies. On the other hand, you've kind of got the, if you want a pretty poor expression for it, but the grandees of the sector that may be a little bit kind of older, probably have a few wrinkles like me, but actually they represent a hugely kind of important part of the sector. Another really important part of the sector, and I think this the reason we kind of focus on the nano agencies, and by nano agencies we mean agencies between sort of 1, 2, 3 people, is that like most sectors in the UK, the agency sector is overwhelmingly a landscape of these kind of size of businesses. So you can see on the charts here, you've got the number of agencies bucketed into different sizes according to their headcount, and you can see in the first bar on the bar chart, the 1 to 2 person agencies rule the roost. There's a huge number of them. So actually, the agency community, the agency sector, isn't the sector that you read about in Campaign magazine. It's not the sector that you read about in The Drum. And that's no criticism of those publishers or anything like that. Obviously, they cater for those audiences. But we've got to be really careful in terms of what we feel is normal when we run our agencies, who we're comparing ourselves to, because I think it's quite easy to sort of compare ourselves to the wrong people, which can obviously cause poor business decisions, but also can cause us quite kind of serious kind of emotional damage, I think, in terms of how we think about whether our business is successful or not. Another one of the findings is that we look at the different specialisms that agencies offer, and they're all kind of charted out in this graph here. Again, you can find this chart and all the other ones on the website at /atlas. So you can see at the top of that chart that website design, UX, UI design is by far the most common specialism offered by agencies in the UK. Almost a third of all agencies actually have some kind of website UX, UI design specialism within this. So if you imagine yourself, if you're in that category, I'd imagine you're finding it quite difficult to actually stand out, to kind of differentiate services, because you're in a really kind of mature and actually quite well catered for part of the agency sector. At the bottom, on the other hand, you can start to see some of the smaller kind of niches in the agency sector, certainly through the lens of agency capabilities and specialism, like influencer, like digital and AI transformation, like Amazon and Marketplace, like data analytics. I think conversion is down there as well. I should have put my glasses back on for this slide. But actually, some of those kind of specialisms at the bottom of the chart are actually some of the ones where we see the fastest growth, which we'll come on to in a minute. So what we're trying to do here, I guess, by providing this data is to show you as agency owners, and we work with agency owners to help understand this stuff for their business, is where are the opportunities? Where are the opportunities to actually differentiate yourselves? What are the fast growing parts of the agency sector telling us? Not just about where client demand is, but where kind of competitive levels are within the sector, but also where media spend is increasingly going. So client marketing budgets follow eyeballs. They follow where the money is and where the success is and where the impact is of the marketing spend. And Mike can speak to that point far better than I can. And it's really, really important that as an agency community, we're keeping a tab on where the client demand is going, where the consumer behavior is going. And I think that's actually what plays out in the charts on screen at the moment. So earlier on, we showed a slide about growth rates across the agency sector in its totality. What we're now looking at on the screen is the fastest growing specialisms. So we take all those 29 specialisms that we've got mapped for the 25,000 agencies in the UK. And you can see that growth rates vary quite radically. So at the top of the screen, you can see huge numbers of agents. So if you're an agency offering Amazon and Marketplace services, you're more likely to be enjoying growth than you are, for example, in content, for example. Now, really important watch out for this is that just because you offer that service doesn't automatically mean that you're going to be a winner in this world. But you can see that your likelihood of winning probably increases a bit. So we can see that the fastest growing specialisms here are influencer, Amazon Marketplace, data analytics, social purpose and sustainability agencies. There's a little bit of hope for the world. And digital and AI transformation. And there's probably not a lot of surprise in that, actually, when you start thinking about it in terms of where there are fewer agencies competing in those categories. You've got marketing and media spend moving into those categories far more, and they're probably they're kind of newer categories as well. So you haven't yet got the opportunity for client-side marketers to actually build a really robust and scalable and sustainable in-house team against those capabilities, and that's kind of what we're seeing in the data on the screen there. Okay, so we also look at geography. It's my degree at university. It runs deep. I think I'll always be a geographer first. So we look at regional agency share. So as you would expect, London accounts for about a third of all the agencies in the UK have a registered in London. London kind of owns the weight, if you like. So a third of agencies, but over half the workforce and 2/3 of the turnover are actually in the capital. But there's some really interesting things going on, which you'll see in the next slide. So the Southwest, for example, has agencies that on average are far more productive per head, per employee, than they are in London or indeed any other part of the UK. The Northeast, agencies in the Northeast are actually leading where it comes to average growth rates. So these kind of trends are important, not just because it kind of highlights the different clusters of agencies, the specialisms, the opportunities, and the kind of specialisms of those kind of agencies in different parts of the country, and it does vary quite a lot. It also points to, if as a sector, now that we're part of the industrial strategy, we want to actually get support. Well, that support might look quite different in Hull than it does in Barrow-in-Furness or in Cardiff or in Truro or somewhere like that. So that's why the kind of geography continues to matter, not least, of course, for local supply chains and winning local clients too. So as I said, the highest growth rates in the sector, and this is probably a good week to be talking about Manchester and Burnham and all of those kind of things. So when we look at cities in the UK, the highest average growth rates belong to Manchester. So if you remember, average growth rates across the sector 3.5%, average growth rates in Manchester 5.5%. Sheffield comes in at number 2, 5.3% as an average. Leicester number 3, and Newcastle at 5.1%. Interestingly, Oxford, despite being at the bottom of the chart by growth, leads on all of those cities by average gross value added and productivity per head. So if there's anyone here from Oxford, we can fly the flag for you. We also think it's really important to point our insight and our data at the topics that actually really kind of matter in the sector. So one of which, of course, is women-led agencies. And so 1 in 5 agencies in the UK roughly are founded by women. But that number drops over time. So 19.7% of agencies are led by women. So you've got fewer agencies that are led by women than you have agencies that are founded by women. I think this starts to speak some of the kind of the structural issues that we still have within the sector when it comes to kind of gender bias, when it comes to investment is far more likely to go into a man-led agency than it is to a woman-led agency. So yeah, women are kind of entering the agency landscape at the founding stage and then leaving it or being outnumbered within it as agencies mature. So 32% of agency directors are women, but actually only 16.7% of all the investment funding going into the sector goes into women-led agencies. So some real kind of structural issues that I think we need to tackle as a sector. So this is the final chart I wanted to show you. As I said, there's so much that we could have gone into today. I kind of wanted to sort of pass on to Mike on this chart really. So we talk a lot about when we're working with clients about choosing your battleground. If you think about almost from a supermarket point of view, where are you putting your product? Are you going to put it in the dairy aisle? Are you going to put it in the cereal aisle? Are you going to put it at the kind of vendor shelf? So what we do, we store lots of data about how the agencies, all these 25,000 agencies, talk about themselves. on their website, in their comms, and all these kind of things. And then we categorize that content into different keyword groups. So keyword groups according to creative language or growth language or ambitious language or language about being multi-award winning. I think it's something like 60% of all agencies in the UK are multi-award winning, by the way. So if you're leading that as your differentiator, you might want to have a think. So you can see here that people, for example, is far more kind of played out in internal comms and kind of internal change management agencies for probably quite obvious reasons. When you look at the word strategic, far more likely to have like weighting on that in the darker blue when it comes to brand strategy agencies, but underrepresentation in some other kind of agencies. So this starts to point at different ways of kind of emphasizing different aspects of your agency's capabilities according to the different markets that you're operating in. And it's really, really important. I think we'll probably come onto this in the debate around being really clear on where your battleground is. So that's me. So you can find all of the data I've shown you today, the insight we've shown you today, and more on the website. There's the contact details. We also have a fortnightly briefing that sends out different articles, different kind of data points every fortnight. It's totally free. So if you're into all this stuff, please get in touch and give us a follow on the newsletter.
Brilliant. Tom,
Okay.
thank you very much. That was really informative. Before we go into questions, I'm going to hand over to Mike because actually I think this is a really good transition across to actually what the research is saying about what next. So
Thanks, Paddy.
Mike, over to you.
Let me just try and share screens, see what happens. Oops. So Paddy, you can see that?
Yeah, that's all great. Thank you.
Perfect. Thanks, Tom, because that set the scene of the sector's doing really well. Yeah, there's other data from other sources as well that say that basically the sector is in good shape. But of course, we all know that the AI spectre is not looming around the corner, but is kind of ever present. And so what I want to talk through now is, what does that mean for the agency business model overall, specifically for kind of new business development, and then open a discussion up later on about the work that I've been doing, which I've called Agency Reset 2026, and why that's important to all of you. So I think there's a false comfort of stability. And this isn't just me with my kind of ruminations and thoughts. I collect signals every week from things that are happening in the industry, people that I talk to, that obviously I anonymize the data for, and I feed it into a knowledge graph that I've built using Claude code. And it's proven to be, it gives me a very interesting view of where the market's moving to. What I think is happening is, to Tom's point, the data that we've got, obviously, which is rear view mirror to an extent, says the sector's in good shape. However, we know, and I know some of you may not meet procurement people, but if you go into ChatGPT or Claude or any of the LLMs and you create a prompt that says, I'm negotiating with the client and they're going to use procurement thinking, how might they think? What might they say to me? What might the negotiation pressure points be? All of a sudden, anyone can think like a procurement person. So just because they're not in the room on your client side doesn't mean their thinking isn't, which I believe is an important point. Because that intelligence, that knowledge base is now omnipresent. We know there's margin squeeze and we know that client budgets are significantly under pressure. The in-housing trend is huge. The data that I've got says something like over 85% of clients are in-housing in one way, shape or another. Now, you could say, well, that's only big clients that they surveyed. But I think overall, the trend is, the trend data is true. I think the other big problem is, I'm old enough to know that we go through cycles. You get in-housing, then it goes back to agencies, back to in-housing, back to agencies. My thesis is, it's not going to swing back. The work will get redesigned. The type of work is going to change. And therefore, the in-housing trend isn't a trend, as in it's going to swing back to agencies. The entire system will change shape. So I was thinking a while ago about, well, why do clients need agencies? Why did they buy them in the first place? Well, typically, and I've spoken to a lot of agencies and a lot of clients and done a lot of research in this, they're looking for specialist talent and creativity. Yeah, they're looking for execution capacity at scale because they don't have the people internally or the expertise, the channel expertise. Setting up ad campaigns on media platforms is complex and remains complex to an extent. And they're looking for external ideas and external perspective. And that's why agencies existed, that's why they exist today, and that's why they're valuable to clients. If you look at where it might go in the future, if you take a thread that says a lot of the engine work, the delivery work, and the coordination work will be taken over by agentic AI, if you assume that's broadly true in the next 12 to 36 months, well, why would a client need an agency? Well, they'll need specialist talent and creativity, probably less of it. They'll absolutely need commercial judgment because that's one of the pillars of where humans can still have an advantage. I'm seeing a lot of clients want growth advisors because it's got so complex. Because of the number of channels they can now invest over, it's really difficult for a lot of CMOs to understand the relative returns from different channels and the relative improvement in brand performance. So they're going to look for advisors that are growth advisors. I think that's a bit of a change for most agencies because that means that the advisor's got to be multi-channel, very well versed in all aspects of marketing to help a CMO or a head of e-commerce or a brand director drive brand growth. This orchestration word is being bandied around a lot, but AI-enabled orchestration is a role that agencies will be playing, which is basically designing and governing how the whole system works. So agencies will or can take a role of, well, they might not own the system about how work flows, but they do need to be able to design it and govern it so that it works correctly. Another key role, I think, is going to be signal interpretation, i.e. building systems that turn data, behavior, and market signals into decisions. The clients don't care about the signals, they care about the decision. Agencies are well placed to do that. And also, obviously, governance and assurance. You'll see more than I do the number of very unfortunate mistakes that are being made by AI automated content generation. Someone's got to govern that. Someone's got to do the QA of that. And also, the C-suite now want proof of value. There's an enormous amount of pressure, increasing pressure on CMOs to prove value. So I think it's going from create and do the work to, yes, create, probably less than it was, and then manage and advise on the operating logic and the growth plan. And I was talking to Emma Thwaite, who works in the sector, who some of you may know, who is a new business development third party. They help new business development for agencies. She was saying that in a lot of pitches, they're finding the same thing. Clients are asking about the right-hand side. They might not be buying the right-hand side right now, but they're certainly asking more about the right-hand side. So ultimately, I built a model which said there are broadly 4 layers in a ladder, in a value ladder. And agencies are being encouraged, forced, or pulling up on that ladder. Moving away from execution and coordination, because that is being done by AI, more into orchestration and judgment. But of course, what that means is that will have structural implications for agencies in terms of the kind of people that you recruit, the size of your organizations, the kind of experience that's required as you move into orchestration and judgment. And I think that's a debate, Paddy, we've had this debate a lot recently as well, about what does that mean for the broader industry and what does it mean for young people? Because that's a very serious problem, I think, for all of us. And a strapline for me is efficiency is not a moat. Control points, as I call them, are, i.e. You've got to work out where the power sits in this wider ecosystem, and you've got to work out where you can rightly hold a position in that new ecosystem that ensures that you maintain control and that you have a powerful position. Because the more you sit in execution and coordination, the less control, the less power, the more commoditized you will be. This isn't a doom and gloom presentation, but it's a scene setter for a discussion as we move into the next piece of the session. I think there are 4 levels broadly of AI adoption. All of us are in the kind of like the faster tasks, productivity gains, using simple chat interfaces to make the work more efficient and faster. We're probably also doing better workflows. We're building workflows using AI around the existing work. But of course, the real opportunity with AI is building new operating models, rethinking the entire way that AI changes the system within which we operate. There's a very good book, which, if you've not read, is worth reading, which is called Reshuffle by a guy called Sangeet Choudhury. Probably the best thinker that I've seen in what AI means for businesses. Really, really interesting. And he talks about basically the efficiency drive it's a red herring. It's really about how the system changes. And that's where the thinking needs to move. And the new commercial models. The danger here is if you just drive efficiency in your execution engine, eventually clients will say, well, you're doing the same work at a lower cost base, you're making more profit, I'm going to halve your fee. And that isn't me making things up. Those are conversations I'm hearing on a regular basis now from agencies and from agency advisors. I had one yesterday. Their fees have gone down by 30% on quite a big base, based around, well, obviously you're using AI. Whether you are or aren't is a bit secondary. The perception by clients is you must be more efficient, therefore it must be cheaper for me to buy you. And that's a very dangerous world. And I talked, Tom, we had a conversation about this. Is there a pricing shockwave coming? In next year's data, will the figures start to look different? Will gross profit margins start to reduce? Will fee income growth start to reduce? I also built something called what I'm calling the AI maturity fit matrix. So when you're talking to clients about AI, where I think you need to be is, if your client AI maturity is quite high, i.e. they're really thinking about it, they're experimenting, they're trying things out, but they're not quite sure where to go. And your AI maturity is high, your thinking's high, you know where the future value is going to be, you know where the control points are, I think you've got a strategic partner zone there. I think they will collaborate with you to build better systems that drive better outcomes, and you will become increasingly important. The danger point for you is, if your client's AI maturity is high, and the bigger the company you deal with, the likelihood is, the higher it is. If your maturity is low, then there's a replacement risk. You only have to look at the news about where big PE companies and media companies are investing in AI-enabled platforms to replace what used to be done by a lot of agencies. So I think there's an imperative to go, we have to be ahead of the game, and we have to work with clients who are also ahead of the game in their AI thinking. The danger point, I think, is this bottom left, where neither the agency nor the client really understand where AI is going. You end up in this kind of efficiency theatre. That doesn't last very long, really, because you get a bit of efficiency, pricing comes under pressure, and then eventually the client gets further ahead than you are, and there's a replacement risk. What does it mean on commercial models? Well, I think the commercial models need to change. If you go back to, I did a post a while ago about the hourly rate model. Where did the hourly rate model come from? I think it was back in the 1780s, I think, when agencies were created because they sold advertising space in newspapers. And they were paid 15% commission for selling that space. And you're like, well, that's not an hourly rate model, that's a commission model. Correct. Then agencies created the creative services. No one was quite sure how to buy that. So they said, oh, well, we'll buy it on how long it takes you to do it. And that was the genesis, the start of the hourly rate model. AI breaks that model. So you have to find new models. So building a marketing operations system, where you design, build, and operate a new operating system for them. Some agencies will find that attractive. Subscription models. There's talk, if you looked at Monk's release recently, they're talking about a large percentage of their business will be a subscription-based business. That's not a retainer. That's you get access to people, MarTech, agentic AI, and institutional knowledge. And you subscribe to that in order to get outputs and outcomes. Increasingly, it will be outcomes. Governance and assurance subscription models, where you're ensuring that the quality of the output is appropriate and it's well governed so that it's within brand guidelines and regulatory guidelines. And then hybrid outcome partnerships, whereby you're prepared to take some risk on your client's success. So a mixed model of fixed plus performance. So I think from selling effort and experts to providing governed capability, better workflows, better decisions, better outcomes. So I think there are some choices to be made. What system constraints move as clients and agencies adopt AI? What do clients really need from agencies next? I think you need to be thinking about that. I think you really need to think carefully about where's your leverage, where's your power, where's the real value that you can create. And that means, what should we stop selling? What should we automate? And what should you redesign for client benefit? And therefore, what commercial model best captures the value that you create and that's defendable? There's a report I wrote called Agency Reset. I do a quarterly update. I did Q1, about to do Q2, where I bring all this thinking together. And Paddy, that's about it, really. A set of prompts for thinking and
Brilliant.
discussion.
Mike, thank you very much. I think both really interesting. I've got some questions, and as Mike, we've been talking about this for ages, but I'm going to start with you, Tom. You talk about sort of the 7 in 10 agencies sitting in that stable band. They're neither growing nor shrinking. They're stable. But is stability actually a slow form of decline dressed up as safety?
Yeah, I guess it depends which side of that zero line that you fall, doesn't it? Um, so first of all, as an answer, I think that pattern in terms of distribution of businesses growing and shrinking is exactly the same it is in the agency space as it is across the UK economy as a whole. So when we apply the same methodology that I showed you earlier on, 73% of UK businesses are in that stable category. So of course that kind of hides a huge amount of diverse kind of experience and kind of growth rates, but the agency sector isn't that different to any other kind of UK sector from that perspective. I think where it does matter, I think, is when we start to look at those kind of growth rates in smaller sets of agencies. So when we start looking at growth rates amongst agencies of different headcounts, for example, or ownership structures, or specialisms, like I showed on the slide earlier on. So some agency types of agencies have got fewer kind of stable agencies, more high growth agencies, but they might also have more agencies that are shrinking, i.e. they're more volatile. So I think particularly in those newer sections that we talked about, where you've got things like Amazon and Marketplace, you've got less stability, but actually more growth, but more shrinkage, and therefore higher volatility. So I don't think the answer to that question is yes, it does kind of mask decline. I think there are other indicators that might suggest that in terms of how many entrepreneurs are actually willing to form a new agency every year. That might be something for us to watch out for.
Brilliant. Thank you. Mike, do you have anything to add to that? Or
Nope.
oh, perfect. Mike, in the report, actually, you talk about sort of agencies that read the report will probably not be able to do anything with the research because they underestimate what it takes to actually cross to the next stage. And especially we know in the conversations we've been having with ISBA that actually marketers are also having the same similar challenges. They're facing similar sort of issues, but on a larger scale with their expertise declining. So, what does the first 90 days actually look like to help change the approach that agencies need to do to cross over to the next, to move forward?
Thanks, Paddy. So if it was me, so if I was an agency leader now, irrespective of size of agency, what I would do is I'd form a small kind of agile transformation team. And I think it's as much about attitude, thinking, and future thinking than it is about particularly skills. So I would say what you need is probably the CEO, an AI visionary of some kind who's thinking about the future, an AI implementer, someone who's very grounded in what does this mean practically, and also a growth leader. So someone that's managing growth for the agency because they're at the front end of what clients are saying and what they need. So that's the first thing. Then I'd go in stages. I'd say, well, stage one is ask, where is our current agency model most exposed? That's the most critical question. Once it's happened to you, you're in firefighting mode. So think now about where is our agency most exposed, assuming AI starts to eat part of our lunch. I think based on that, you can then identify a kind of a beachhead of, well, where do we focus? Because you can't do it all at once and it's too dangerous. That's stage one. So form a beachhead. Secondly, what should we be paid for in an AI first client market? What are clients going to really value and what will they pay a premium for? That then helps shape that first kind of new value proposition and helps you think through, well, where are these so-called control points? Once you've done that, then I think stage three is, well, how do we turn work, data, decisions, and outcomes into reusable intelligence? There's a brilliant report by the WEF, the World Economic Forum, all about AI operating models. And it's the first thing I've seen, which is actually very practical. I wrote a post on it today on LinkedIn. Look at my post, it references it, about this reusable intelligence thing is really important. Once you've done stage 1 and 2 and you've built your first proposition, you have to build a continuous learning model so that the system gets better and better. If you can do that, that says that your beachhead is scalable. Then I think stage 4 is, well, how do we redesign the operating model for the agency with AI and humans? What roles do both play? In that book I showed you, Reshuffle, he talks about AI is not going to replace your job, and AI is not going to be, a person using AI isn't going to replace your job. What happens is a job is a set of tasks. If you break a job into 10 tasks, 5 tasks might be done by AI. 5 tasks are human-based. But that means the role has to change shape. And that's where I think we need to do more thinking. It's about role redefinition, not the doomsday, it's going to take all our jobs. So I think the fourth thing is redesign the operating model. And then fifth is how do we capture value when AI changes cost, speed, and visibility of delivery? So I think there's a 5-stage, very practical approach, Paddy.
Brilliant. Thank Tom. Anything else?
No, I think that's right. I think Mike's point about actually harnessing the talent of the people who are already exploring AI and kind of evangelizing about AI in your organizations is sometimes an overlooked strategy. So I totally agree with Mike on that.
Yeah, and actually it came up in the conversation again, clients questioning AI and questioning, so they're sort of, I think they're seeing some creative that ads have been done are 100% AI, and they're saying, why are we actually paying full price for something that's been delivered by AI? Now they're winging it, but at the moment, the agency, how they respond. But sooner or later, when the marketing are getting pressure from the board and saying, well, hang on, if AI is there creating efficiency, that means less people are involved. That means the costs should be lower. So how, but I think, Mike, I'm going to come to you. How do you think agencies need to adapt in that commercial model to showcase how the value AI brings in and why we should be paying for it?
So I think agencies need to be on the front foot about presenting options, about linking back to outcomes. Ultimately, if you're just delivering execution, if you're running 100 ad campaigns for a client, it's going to be really hard for you to defend against AI is just an efficiency tool. And so you're going to end up in a trap whereby you've got a fixed price for running campaigns, you're using AI, and they just put pressure on you. And it's a race to the bottom, and we all know that. Where you have to go is say, look, currently you get us to run 100 campaigns every quarter. However, what you're looking for is you want to drive sales growth. Well, we think there's different ways that we can work with you to drive growth. And what you really need from us is maybe it's a subscription model too. We've got 300 person years of experience around running digital campaigns. What you need is a package that gives you access to that expertise, access to all that knowledge in explicit formats, access to our tech stack, and yes, we will also execute and govern for you as well. And once we get to know you really well, we may take a bonus on top of a base fee based upon your performance. We'll put our money at risk based on your performance. Now, I know there'll be a lot of people saying, well, I don't control all the levers. That's out of my control. That puts me at risk. Yeah, but if you don't have the conversation, then you're saying to the client, I want to sit behind my kind of walled garden and keep charging on a model that basically is massively under pressure. I mean, Tom, what's your view on that kind of fee model and where that's going?
No, I think that's right. And there was a really interesting line that Arthur Sadoun, who publishes his CEO, came out with in like a quieter corner of Cannes last week. And he said that the compounding effect of overpromising on AI in pitches and also underpricing the work is what actually drove the job cuts within
Right.
Within the holding company. So, and that speaks to exactly the point you're making there, Mike, is that if you kind of agencies are in both sides of that equation. And for some agencies, they've got the additional complication is that, you know, if we're investing in technology, we're investing in AI, we're investing in training, at the same time the client is saying, I want it faster, cheaper. Those two things don't live alongside each other very well. So I think agencies
Exactly.
have to talk about, as Mike's described, the outcomes that the agency's expertise with the benefit of AI kind of passing on kind of expert ways of thinking across the agency. What's the value of that to the client? Is thinking about the value of the outcome, the value of the work, the value of the relationship, the value of the expertise.
I mean, I think, Tom, also the thing that you as agencies have is, which is really hard to achieve, is trust. Clients trust you.
Yeah.
You've worked with them for years. In a trust-based relationship, they're much more likely to collaborate. So you have an advantage to open a conversation on a broader commercial basis. But I think you have to take the lead, because the danger is for bigger clients that you're working with out there, if you don't have that conversation with them soon, and you have to segment the market and work out which ones to talk to, you will be on the receiving end of a board level discussion around driving marketing operations efficiency. And that will result in a fee reduction. And they'll put you in a box. And that's a dangerous place to be.
I've got one question actually just popped into my head, which is America recently pushed and said they don't want AI to be shared outside of US.
Yes.
What
Yes.
impact will this have if agencies suddenly invest into this AI strategic thinking, strategic process, and the US shuts it off?
So I have a view on that.
Yeah.
Tom, I'm sure you do as well. So I think the US are playing. I always think about the second and third bounce of the ball. The danger for the US if they carry on like that is it will force organizations to think about open sourced LLMs. And those typically come from China. Because what the Nvidia CEO said was, he said, "I'll give you the LLM. I don't care. You can have it for free. I want more chips sold. So I want you to have small language models and medium-sized language models on your servers, either physically or in the cloud, for you to run in your own organization. It may not be as capable as the latest version of Anthropic's models on Claude or on ChatGPT, but it may not matter." So I think there's going to be an interesting move around what happens with these three massive foundation models, the trillions of dollars being invested in infrastructure. Is that going to pay off? Or will we end up using the technology in a more cost-efficient way? I don't know, but that would be my hypothesis. Tom?
Yeah, I mean, it's fascinating, isn't it? I think we've also got to assume that one of those big foundation models goes pop
Yeah,
at some point. Which one is the Betamax of this world? Because one of them the economics don't make any sense.
they
One
don't.
of them will have to go pop. I'm don't make many bets in life, but I think that's right. I think the other thing is that, and so the agency that I managed we were a performance agency. We were really close partner with Google, got loads of support from Google. They helped us grow, they helped us run advertising campaigns, they helped us train, and it was fantastic until it wasn't.
Yes.
And suddenly, they changed the way they dealt with agencies. And I think there is a danger when we're running agencies that we start renting part of our business to somebody else. We outsource our
Yep.
contact data to somebody, our CRM to data, it belongs to somebody else. Um, we build an operating model on somebody else's real estate, for want of a far better expression, and that's probably the right thing to do, but it comes with risk. And I think understanding the risk profile of all of these things is really important.
I mean, if I was a buyer now on the client side, because I used to be an ex-procurement director, I would, there'd be a few basic principles around AI adoption. One principle would be we own the data. We categorically must own our own data, and we must own our own intelligence layer as well. We have to do that. We also have to own the workflows, because although you won't want to hear it, obviously, when I first engage an agency, I think about offboarding. The first thing I think about is how can I get them out if I need to? Because I have to, because it's about risk management, Tom, as you say. And therefore, you have to work out as an agency, when you make these new package propositions to your clients, if the proposition is, we'll run it all for you, we'll own the data, cleanse the data, bring all the data sets together, own the intelligence, own the workflow. If I was a buyer, I'd be like, no, I can't do that. You can build it inside my environment so that I own it, and you can run it for me, and I'll pay you a build fee, and I'll pay you a run fee, but there's no way I'm ceding control of that workflow and intelligence and data layer to a third party. It's too dangerous.
Brilliant. Anything, so there's coming up, literally we've got 5 minutes left. So any last bits of advice that you would like to share, just to get agencies, actually businesses, because this is impacting most businesses in the current state. So I'm going to come to you. Anything last you'd like to share that you think actually we need to start thinking about right now and start thinking?
Yeah, I think obviously the operating context for any business is changing all the time, and you could argue we've had 15 years now of being battered by different kind of shock waves that have run through the world. So I think we're pretty resilient now. I think in as a business community by now. But I think um, some of the kind of the classic ways of thinking still count. Being really clear on how you add value to your clients' businesses, and like super clear on that. Who are you best placed to help? How are you best placed to help them? Why does your business exist? What can you solve for a client better than anyone else in the world? I think if agencies and as businesses we keep coming back to those really core questions, obviously aware of the operating context from which we're operating, I think we still have to kind of have that focus.
Brilliant, Mike. Thank you.
So I think my parting thought would be around don't think about AI as an efficiency tool. Think about it as a
Yeah.
transformation opportunity and a way of repositioning your commercial models that make you more profitable. I come from the consulting world, the big consultants, the big five as they were. Um, we used to make well over 25% EBITDA margin consistently. And that's because we never sold ours. We sold packages of outputs and, in a lot of cases, outcomes. Look at what McKinsey are doing. Look at what BCG are doing. I think they're saying like between 20 and 50% of their work will be outcome based fees, where they put fees at risk. Now they're bigger, they've got deeper pockets, they've got investment opportunities, they can take more risk. But I look at direction of travel. I think we need to think seriously as agencies about what does that mean in the next 3 to 5 years.
I completely agree, and I think actually it's what will help our clients get further into bed with the CFOs, CEOs in terms of making commercial decisions for their business. Um, Thank you both, Mike, Tom. Thank you. That was really, really informative, really interesting, and enlightening session. We are going to look at doing some follow-ups on this because I think there's a lot still to unpack and discuss. So watch out for this in the future. We are going to be following up with some key takeaways tomorrow, and we'll be sharing the video with this. If you want to get in touch with Tom, Mike, myself, please just drop me an email, and we'll be happy to sort of follow up, have further conversations with you.